So the accounting issue that I'm looking to explain relates to impairment, where we have an asset with a carrying value of 100, which has a value in use of 130, but if we sold it, we'd only sell it for 85. So what we're looking at here is the practical application of the definition of impairment and an impairment review. So an asset is impaired if its carrying value, in this case 100, exceeds the recoverable amount. Now there are two ways we can recover from an asset, and it's the higher of what we can sell it for, 85 in our example, or the value in use, the present value that we get from keeping the asset. Now, in our example, that is 130. So the recoverable amount for this asset is 130. We're not going to sell it. Why would you sell it? If you keep it, you get 130. So the sensible economic decision is to keep the asset. The recoverable amount is the higher of the value in use, present value, future cash flow, and the fair value less cost to sell, what you can sell it for. So we can recover 130. It's in the books at 100. You've done a test and there's no loss. Yeah? The answer is there's no loss. There doesn't have to be an impairment loss every time you do an impairment review. There's certainly not an impairment loss of 15, absolutely not. And nor is there an impairment gain. You do an impairment review in order to work out whether or not there's a loss. I don't like the word impairment gain. It's a bit of an oxymoron. Now, if you had a policy of revaluing the asset, but you wouldn't even revalue it to 130, because if you revalue an asset, you don't revalue it to the value in use, you revalue it to the fair value. So let's not even go there. I mean, the only possible little thing you could talk about is if the asset had previously suffered an impairment loss and it wasn't goodwill, and there was a reversal of the circumstances that caused the original impairment loss, then if this was a second impairment review, maybe you could be reinstating the loss, but you wouldn't have an impairment gain. I wouldn't call it an impairment gain. I'd call it a reversal of a previously recognized impairment loss. But look, I've gone into a blind alleyway there, really. If the carrying value of the asset is 100 and the recoverable amount is 130, there is no impairment loss. There is no debit or credit. End of. And well done, because the vast majority of you got that correct.